Hello everyone, Andrew here from Trading NFX with a new YouTube video. In this one I want to break two trades that were sent into the private Discord signals group. I don't really want to promote the signals, but I think those two trades were a perfect example of risk management and trade management. So that's why I made a video about these two trades, basically explaining them, the setups, how I took them, how I managed them, because there's some important nuggets. One thing I want to talk about before getting into the breakdown is basically risk management. So what happened with one trade is that it came very close to our stop loss. It came like, I think 2 pips away from our stop loss, and that moment everyone started texting me like, oh, another losing trade, I blew my account, I'm blowing my account if this hits stop loss. So I was just wondering, I was just sitting there and wondering, like, how can you blow your account when we are basically break even for the month and we are just 2 pips away from a stop loss? How can you blow your account? So that's when I really realized how, I don't want to say let's say short-minded people are when it comes to trading. They really want to become rich. They think of trading like a get quick rich scheme, which is really not. It's all about long-term goals, consistency, discipline, and all of that. So people are not thinking that long-term. Usually what I noticed during my 4, 5, 6 years of trading is that people who make it always think long-term. So they're not thinking about profitability on a week or a month. They're thinking about, oh, was I profitable for the last 3 months or for the last 6 months or for the last year? While people that come into trading and they never make it are those people who are focusing on a daily statistic or even weekly statistic or even monthly statistic. But most of them are just focusing on the week, like the week. Did I make money this week? If they didn't make money or they were break even, they're very unhappy about it. Which I understand, because when you come from a place with no money and you come into trading, which again is the worst thing you can do if you don't have any money, you tend to have that mentality. So I don't really completely blame them, but people need to understand that the only way to be successful in trading is by using risk management and trade management. So you can have 3 weeks of losing, and then last week, if you keep using the same rules, the same strategy and everything, you can become profitable for the month. While people change their strategy, they change the risk, and they don't let even the whole month complete. So this is what happened in my own group. We took 2 trades in the beginning of October, both were losses, which again happens. Then we took another trade last week that went for 2R, so that got us back to break even. And then the last 2 trades were both 2R. One of them, personally, I closed at entry because that's my trade management rules, but it did end up going for 2R. But again, that's what I noticed. People were messaging me, even if we are basically break even for the month, people are messaging me, like a few people, oh, I'm gonna blow my account with the stop loss, we're always taking stop loss and all of that. And it doesn't really make sense, because if you look at the stats, like the proper stats of trading, we were basically break even, and now we ended the week at the month at, let's say, plus 2R or plus 3R, or depending on how you manage the trade. So 3%, again, 3% a month is what most investors are looking, most hedge funds are looking for. 3R with basically 2R, 2% of drawdown. So we made 3% with 2% of drawdown. That's amazing results for any hedge fund. But again, people don't want to see that. What they want to see is 10% profit in a month or 15% profit in a month. That's what people want to see, because they have 1 losing trade, they have 2 losing trades. On the 3rd trade, they just go high risk, so they use 3% risk, they lose that one, and then the next one that basically runs for 2R, let's say, or 3R, and gets the whole system back to break even. They risk less because they don't have trust in it, and they just basically they mess up their whole statistic. I see that so many times, and I just wanted to make a video about this because it's so wrong. You need to risk the same amount, you need to have the same trading plan, the same trading strategy, and let your system work. Don't change things because you're not gonna be profitable. So if you're risking 1%, and then you risk 3%, and then you risk 0.5%, you're not gonna be profitable because you don't let the system run. So even if that trade would have hit stop loss, that was just the plan, right? The next trade would have went to take profit, go back to break even. Even if we finish the month break even, that's perfectly fine. Most people blow their accounts within weeks. So even having a break even month is better than having a losing month. So that's what people need to understand, especially if you just came into trading and you're new. Don't watch those Instagram influencers, don't watch those signals channel that promote 10-15% return every single month or week. That's not real. A real trader, a real profitable trader only aims for 3%, 4%, 5%, which is on the high end, every single month to make money. Because imagine you're trading $10 million. That's the way you need to think about it. If you're trading $10 million in capital, do you really want to go for 10%? No, I think 1% or even 2% is more than enough. You get your performance fee from that, even if you make 3%. So again, that's just how things really work in trading. So just wanted to talk about that. Now let's get into the breakdown and we'll come back after. Alright guys, so just wanted to break down 2 trades that we took inside the Signals channel, which you have access if you are in the mentorship group. So if you join the mentorship tradingnfx.com, you get the course, you get the weekly Zoom course, and you get access to daily analysis, daily outlooks, and basically trades from one of my portfolios. Now, we had a very nice win last week on gold. We took 2R. Alright, so 2 trades that I want to break down, GBP/USD buys and EUR/USD buys. First of all, I want to get into EUR/USD because it was a very clean. Now, higher time frame bias, daily, we did have a nice bullish push. We had a change of character here. And then basically we retested, we made a new high, and then price came back to retest. Now, because it came down very aggressive, I was looking at the liquidity to be taken, which was taken from this daily low. And then candle closed like a doji, so I was expecting price to move up. Now from that simple bias, we moved down the time frames. For the day, we knew we had news at 3:30, USD news, so that could bring some volatility into our direction. For our time frame, also we had liquidity here, what was taken. The lows there, which were taken, we had a few more targets of liquidity down below, which fortunately weren't really taken. 1 hour time frame, price came down very aggressively, so waited for that liquidity to be taken, and at this point we had some reaction. So we took the low, that low, we closed as a very bullish engulfing candle, but after that price came right back down, so it played around a little bit, and then had another break of structure to the upside, ranged, and this was our setup. So now we moved down the time frame, 15 minute, we took the low, had a reaction, price retraced, had a push up, had Asia range, Asia low, was waiting for the retracement, the simple Fibonacci retracement, so mark the low, mark the high, 0.7 retracement, price played around in this area a bit and then came right back into that. Now the timing is very important, because timing is that price came here right 30 minutes before the news. So when that happens, it kind of gives you a clue that price came to take liquidity and then is ready to take the move. So when price came there, very simple, didn't really wait for confirmation. Even if we had a confirmation entry, we just entered the trade with a bigger stop loss. So entry was 1.05390, which is basically here. Price came in. We used a 20 pip stop loss. And as usual, our first target is a 1-to-1 and then second target is a 1-to-2. Alright, so price came there and basically, played around a little bit with news. We had a 5-minute confirmation, so we could have taken a 5-minute confirmation entry with a lower stop loss, because price took the low, he took the high, and then retraced and wicked this low. We could have just entered there with a stop loss here, but that was a bit risky because price can spike down a lot more with news. So we just let it breathe, and then it finally moved very fast. Basically 4, 1, 2, 3, 4, 5, 6, 7, 8, 9 5-minute candles, basically 1 hour candle. It hit our take profit too. So we went for 2R and then that was it. So very simple trade that I love to take. It's very nice when it does set up. And the next one is GBP/USD, which unfortunately was a mistake from my part because the timing, as I said, wasn't that good. We see we had the entry at 1:24 p.m. so that is 2 hours before news. The idea behind it was the same as EUR/USD. Price bias was a little bit bullish because daily had a change of character, price came back into the extreme, and then I was looking for that little buy retracement. We did have the sells here very nicely to a new low, but we are still in this extreme zone where price did have a nice reaction. So 1 hour came here and had this huge bullish engulfing candle, price ranged, so I was looking for a potential buy back into the 4 hour area. And this is where more confluences formed, because we had Asia range, price came down in London, and then we had a nice push to the upside. So basically we took the low, we took the high, created that V-shaped recovery. So according to my trading plan, when I see this setup, I wait for the retracement and then look for those buys. So that's what I did. I marked the retracement from this low to that high. Price came there. We had the wicks, we had the imbalance, we had every confirmation. So that's where I basically executed the trade at this level. Again, stop loss 20 pips, take profit 40 pips. 1 to 2, and yeah, my mistake was the timing. The timing was not perfect because I should have expected price to come lower before news, but again, there are situations where this plays out very nicely, so it just pushes to the upside. So again, if my trading plan says that's a valid entry, I need to take it and then basically see how I could have managed it better after breaking down the trade. So price did react a little bit and then came back below this low, and this is where some trade management rules come into play, because once we broke structure to the downside, that entry kinda invalidated. So I was looking to basically get out of break even if I did have a feeling that price is gonna shoot up with news and we're gonna hit take profit, because it's a trade idea sent basically for a lot more people. I need to be very strict, so that's where I called to close trade at -3 pips, because if you look at the 5 minute, we came into that extreme, we closed this imbalance from this push, and then price gave a V-shaped recovery very nicely, almost back to the entry. So when I had this push just before news, just wanted to get out of the trade, because that's what my trade management rule says. If we have a break of structure to the downside and then price retraces to my entry, it usually just continues to the downside. So I'd rather just close at a small loss and then let the other trade, which was EURUSD, which had a very good entry, just play out. So it was all about mitigating risk, removing risk from the table, and yeah, basically that's it. But you see how price came very close to our stop loss. Here's where 1.7 pips away from stop loss. So here's where a lot of people start panicking. They start throwing bad words, they're blowing their accounts and all of that, while patience is very, very needed. Now on my other account, my other funded account, I did take another entry, because 1 minute came right at the extreme with news and then kind of playing around a little bit, so I entered another trade, and yeah, I took some profits from that also, while keeping EURUSD fully to take profit too. And you see how price basically went to 1%, which with this entry I would just have closed at 1% because it was such a bad entry. But it almost hit take profit too, came 1 pip away. Again, that should have been a manual close, because if you know how pricing works, you see basically New York forming the low, forming the high, then price comes back up to take New York high and then starts rejecting. It's usually aiming for a New York low, so it wants to set another low before going back up. So that should just have been a manual close, and then price came down at the entry. Again, very bad entry. But that was it for the breakdown. I hope you found some golden nuggets.
Alright, so I hope you enjoyed the breakdown and basically this video where I really talked about risk management and trade management. I hope you found some golden nuggets, especially when it comes to trading, because I know a lot of people are interested in the strategy and how I trade, how I make basically money trading, which is not that complicated. As you saw, the system behind it is very simple. It's all about timing, risk management, trade management, and yeah, the entry basically and the exit, because as you saw, price ran right to our take profits and then retraced all the way back and even went lower. So most people, when they see a big move like that, they just expect it to go a lot more, so they get greedy and they don't take profits, while that is very, very wrong, because entry is as important as the exit. If you just keep holding the trade, expecting it to go higher, you see what happens. Price hits your take profit and then goes all the way back, and you missed all those profits and you take a break even. Most of people, and I know I did this, I will just re-enter the trade and it get stopped out for like more than I initially risked instead of taking profit. So that's just how the mind works, because we are greedy as humans. But it's very important to set rules before entering the trade. So you set your stop loss, you set your entry area, you set your targets, and then your trade management rule. So you go break even after, for me personally, 1 to 1, and then at a 1 to 2 you close a full take profit.